All righty.
Okay.
Well, good afternoon, everyone. Welcome to Impact Alpha's Plugged In. Again, I am your host, Sherrell Dorsey, and I am so excited to have our special guest today, Bahiyah Robinson. I'm going to let you all trickle in here. And also, as you are coming in this afternoon, feel free to drop in the chat where you are calling in from and what organization you represent. We want to make sure that we acknowledge everyone in the room. And again, thank you so much for joining Impact Alpha. And for those of you who are actually new to the Impact Alpha family, make sure that you get Impact Alpha open, delivered to your inbox. Sign up for Impact Alpha's free weekly newsletter. It's crisp, it's an expert curated investment briefing. It lifts people up, it lifts up data and tools and trends, and as well as job opportunities to help you stay ahead of the curve. So find the alpha and impact at impactalpha.open. So again, as you're trickling in, feel free to drop your name, where you're calling in from, and also the organization that you're representing as well. Bahiyah, thank you so much for joining us this afternoon.
Thank you. Thank you. It's been exciting to be on this journey with you, one, and really excited to talk to you. Big fans and subscriber of Impact Alpha, David's work, your work over the last few years. So really excited to have this conversation and basically an inside look on what we talk about, every couple of quarters anyway.
Yeah,
Happy to.
absolutely. Absolutely. So I think that there are some folks who are new to both your work and also the platforms itself that you have built. And so I want to go ahead and just kind of give a rundown here. Bahiyah Yasmeen Robinson is a recognized thought leader and entrepreneur in the asset management and impact investment industry. She spent over 15 years building new platforms to drive deeper global impact in capital markets. And with a passion for generating alpha and impact in alternatives, she launched VC Include, or VCI, in 2018 and the Include Ventures Fund of Funds in 2021. The Include platform has sourced, supported, and scaled over 100 next-gen PE and VC firms, which have raised north of $2 billion and have created over 13,000 jobs in the last 4 years alone. Include Ventures has invested in 15 managers through their first fund of funds product out of a pipeline of over 800 venture, growth, and buyout firms to date. For new emerging managers entering the market and for allocators looking to expand or deepen their pipeline of emerging private market funds that demonstrate a strong thesis in an impact-related sector. Bahiyah is also an Aspen Institute Finance Leaders Fellow, a member of the Cirrus President's Council, and a Bloomberg New Voices Fellow. Yes, we love
Yay.
Bloomberg New Voices. And her work has been featured in the Stanford Social Innovation
All the
Review,
places.
all the places, Chatter, CNN,
Yeah.
all the things. And again,
Blah, blah,
we
blah.
we have just such a treat today. So I actually want to start off with really talking about the impact. You have deployed 35, you've been responsible for deploying over $35 million and catalyzing over $1 billion in impact. And so talk to us about these various platforms and this ecosystem, this holistic ecosystem that you've built around, blended finance models and impact.
Yeah, absolutely. So, this is a big kind of pause point for me. Not pause in terms of I'm still, moving fast, but an inflection point, right? Because it's been about 7 years since I launched what originally was VCI, but what I now call the Include Blended Finance Platform, 2018, June of 2018, so a little over 7 years ago. And before that, I was investing through a venture philanthropic vehicle, also supporting a lot of kind of new generation founders in emerging markets, mostly Africa, and then coming here to the US and really thinking about impact broadly. I know that's one of our kind of industry questions is what does impact mean? And for me, I was seeing a lot of different opportunities, products, and initiatives and companies that were being launched across the impact spectrum. And so you think about 2015, 16, 17, where I always joke that impact investing was really called philanthropy, like in the early, the early 2000s and 2010s. It really was more social entrepreneurship and impact. And I started there working with, from Council on Foreign Relations and Ashoka and all of those kind of, on the institutional investment side, but also on the philanthropic side. And so I wanted to figure out a way to kind of build a platform that would be able to grow over the next 20 to 30 years, like really think in decades. And so what I landed on was this emerging manager platform because as I was traveling through Europe, Africa, and even here in the US, I was seeing these firms emerge that were focused on everything from climate mitigation to maternal health to education, right? Like future of learning, what we call it kind of now. But at that time, I saw this wave. And so the question was, what do you build to kind of help be that onboard and that flywheel for impact more broadly? And so now, fast forward kind of to today, we've invested 35 million kind of directly, but I think our biggest impact has been what we've catalyzed. And so maybe taking a fresh look at what the platform looks like today. It's a blended finance platform. Our incubator and accelerator is now called VC Include. It has graduated 66 first-time fund manager, emerging manager firms across private equity and venture. That's 96 actual managers and they have raised over $1 billion. And so I always talk about the 100x impact because from the capital that we were able to get in the philanthropic space, we've really been able to launch these first time firms and they've been very successful. Then moving on to the fund of funds product, we've invested in 15 firms. It's about $1 billion in AUM collectively that they have raised. And we're just on that journey. We're just in the first 2 to 3 years of supporting them and seeing how current market conditions are affecting and also creating opportunities for that portfolio. And then our advisory and our third kind of leg of the stool of the blended finance is, what I call our advisory. It's been supporting about 40 GPs before 2020. Then you started working with LPs to do things like build a climate finance, non-dilutive working capital facility to support climate firms specifically. So we invested non-dilutive capital into 10 climate-focused firms in 2021. And so as the industry has continued to grow, we kind of, react and inject our market intelligence, our, knowledge of the pipeline of emerging managers, and really kind of provide that advisory to both sides of the industry to really drive impact at scale.
Yeah, there seems to be almost this like flywheel approach, not only the capital deployment, but also building up talent in this space to also give them the tools and the skills to further catalyze, these funds to further invest in some of these solutions, especially I think during a time right now where it seems like we're going to see capital change very, it's going to be very, very different.
And can I speak to that a little bit? I would love
I would
to.
love
And
that.
I
Yeah.
also forgot, I told you that I would give the disclaimer to everyone. If I'm just a little bit off, and I'm sure a lot of you guys have experienced this. I'm with my mother, who is unwell right now and has a form of dementia. So I'm only saying that if she comes in and I'm not able to kind of, react in the moment, I might have to slow down and just deal with her for a second. So you might see that real time, real life kind of energy.
Real life, real life.
Real life, it's
We
real
are.
life. And again, I think, everyone's kind of dealing with the version of it, whether children or parents. And
Wow.
so I just
No,
want to make sure that people are like, why is she looking away or, losing her train of thought? So,
no,
uh,
absolutely. We are so grateful for your time, Bahia. And I think everyone in this room, number one, are impacts of change and agents of change and agents of impact. And so caregiving, first and foremost, is significant. And that's, I think, why we're all also in this room, because we do believe in massive caregiving, especially for people, planet, across the board. So again, we're grateful to have you in the room here and the fact that you have so much going on and you are still just doing so much work. I just wanted to to shout out right here, Jackie Logan, who's in NYC, is an investment, is part of Honeycomb Credit investment crowdfunding for climate and social impact, and
Okay.
mentions they open up investment to anyone across the U.S. accredited and non-accredited. So yes to inclusive financing. So just wanted to touch that point there from Jackie.
Beautiful, beautiful. Excellent. So, okay, so where were we?
Yeah, yeah.
Let's
So
get back
back
to.
back into the conversation here. So you have, pointed to millions, millions of dollars that have catalyzed billions of dollars in just a short period of time, quite frankly. I'm curious about some of the examples where the capital, and you've kind of started to point to this towards the climate sustainability,
Yeah.
aspects, but can you point to maybe some specific outcomes or things that you're seeing that have moved in the market? And primarily, I ask this question because, we're seeing a lot of the cuts to very, big projects, right? Both on a federal level and in kind of the private sector around certain green energies and things like that. So
Mhm.
curious about where these blended finance models
Mhm.
are beneficial and advancing, various climate sustainability initiatives.
Sure. I think we have to be thoughtful about like how things are moving and also in what segment. So when I say that, I mean, yes, at the US federal level, there's just this like there's this volatility and this kind of reaction, right, to anything climate. Even though we kind of I think we there is a at least super majority consensus, I think, from what I've seen in terms of data, that there is a climate crisis, right? So I mean, we see that there's a climate crisis, and yet we've got some we got some headwinds in terms of, how to move forward. But then if you look a little bit broader to Europe and to even multilateral development agencies have deployed more capital even over 2024 than ever. I think it's 1.9 trillion or so. And so I think we are grappling on many levels, to be honest, but in the climate space of kind of where can we move capital and where can it actually help to mitigate how to solve net zero or to get to net zero, to get, -5 degrees or might, get the climate, get the get us to a more sustainable place, right, from a climate perspective. Um, So I see that as private capital moving. So I have not seen a lot of private capital slow down. I
Mhm.
have seen the federal dollars and EPA, GGRF, all of that obviously really, challenging and a bit disappointing that that capital hadn't been deployed or wasn't deployed. I think some of it got through, but a majority of it hasn't. And so that kind of, it slows things down on the US side. But then when you see climate mitigation strategies in other markets, Asia, Africa, even Europe, I actually see, and as I'm in those markets, I see that they are, thinking about local strategies and local deployment. They're not really looking to the United States for that type of signaling that as, they have in previous kind of decades and
Yeah,
cycles. And so I think that's where I think when you look at the US market, though, if we think about kind of at home climate mitigation, since we are the largest polluters and we are kind of the largest contributors to the climate crisis, that private capital, large family offices, I mean, folks are moving pretty swiftly, but also a little bit more under the radar to really help across social, environmental kind of climate mitigation strategies. So I
yeah.
do see that picking up. And obviously, it's just, it's not even a full year into this current administration, but the folks that have dedicated themselves to climate 2 years, 3 years, 5 years ago are still there. So I think
Still in the
those are
space.
good signals.
Yeah, absolutely. And because you work across markets as well, Bahia, I really appreciate you sharing that perspective. I spent some time in Nairobi over the summer
Yeah.
connecting with climate founders and also just seeing, I think, the growth of even just solar in
Oh,
Africa,
yeah.
particularly sub-Saharan Africa, has been really fascinating to see. So I'm also curious, as you have these various platforms, like I mentioned, that flywheel, right, of talent, capital deployment, what have you. I'm curious from a global lens in this conversation on climate sustainability. Are these also embedded within the framework of include in the emerging managers program that you all provide as well? You know, and you know, are these more than just US based fund managers? Are you all looking at like, hey, we've got to go global based on what's currently happening?
Yeah, so a couple of things. I started global. So if you remember, started in impact investing, invested in sub-Saharan Africa and then kind of came back to the US and said, well, why aren't these types of innovations? Why aren't we kind of creating that flywheel here? Where I saw it starting to bubble up in, let's just say 2011, 12, 13, and being a part of that, those public-private partnerships and being a part of that kind of ecosystem building and investment, that kind of
Yeah.
marriage of the incubation, the investment, and the ecosystem building. And so taking that kind of replicable model and bringing it here um, was something that I thought, would work, and it has. Um, so the global piece has always been embedded, but when you think about the first time fund manager program and the incubator, we had to make a decision because from an infrastructure perspective, there's different laws that govern, right? Like each country, and especially in Europe, it gets really complicated because every country has its own regulatory body, et cetera. So we did do a lot of non-dilutive capital for climate funds in Europe through our advisory business line and kind of created a blended non-dilutive vehicle or facility for grants for climate funds. But in terms of the incubator, VCI's kind of fellowship, they can invest globally. And a lot of them, about a third of them have invested globally, but they have to be domiciled in the US. So that's the kind of, the kick, because in order for us to really support the growth of the firm
Yeah.
as they're launching, it has to be if we're bringing in SEC or FINRA or whomever, I mean, it has to all kind of work. We can't be we can't be all over the place with kind of what works for one firm versus another. So they are domiciled in the US, but a lot of them do have strategies that include LATAM, mostly LATAM and Africa and some Europe. Those are kind of the
Yeah.
key markets. Asia, not as much, maybe one or two firms, whereas kind of 30 or so are, kind of spread and are inclusive of emerging market or frontier market or just global market strategies.
Yeah. And what are you learning from these fund managers, or what are you and your team learning in these across, you know, the founders, fund managers across the platform, you know, that others in these markets should really be paying attention to?
Um, I mean, a whole bunch. I think at the very top line, um, timing does matter. I mean, there's obviously a number of different factors that kind of create and grow a firm. I've always taken a decade at a time approach to kind of everything that I've done. And so for Include, it was always a 2020 to 2030 strategy. And so we're halfway through, and like I feel satisfied, although there's a lot of things we still need to do. I still feel satisfied with where we are with our numbers. We wanted to, build and scale 100 emerging managers. We're already pretty much there now.
Mhm.
And so like there's some things, right? The 100x impact in terms of the managers that have already raised. And so I think to be fair, there's certain things that I couldn't tell you were going to happen in 5 years. I thought, 10 years, give it a go and like see what the market does. So I think the timing of the market, I launched before the pandemic, that happened. And I think that did spur a lot
Yeah.
of, and launch a lot of impact fund managers. I mean, it did, right? Unequivocally. Now, whether those managers or whether those firms are equipped. We've done our best to equip them. We're equipped to continue to grow beyond a fund one or fund two. We're really thinking about building franchises, not just one fund. And so, how can we make sure that those firms are both equipped and they understand that it's 10-year cycles, that they're going to have to, do things like, you know, maybe they don't raise as much capital in fund one. They don't raise enough to really sustain their firm until fund three. What do those things mean to managers that are starting out? And I have a lot of what I've been outside of even our platform. I've been really encouraged by some of the firms that are north of 500 million or even north of a billion that tell me our first fund was 8 million, 10, 20 million dollars, right? And so I think we
Mhm.
put a lot of pressure right now on you have to have the $100 million scalable fund in fund
Right.
one. but you don't necessarily, it depends on your strategy, depends on if you're private equity. I mean, there's some, nuance to that. But I think
Yeah.
kind of early stage venture, you don't actually have to be that 100 or $150 million fund, but you have to have a plan.
Right, right, right. I think that's an excellent point because we are seeing smaller funds or like micro VC firms
Yeah.
that still have a lot of impact. Where even when I talk to climate founders who, have seen federal dollars cut from their balance sheet,
Yeah.
turn to some of these smaller firms, that are, $10 million and under for a lifeline. And so
Mhm.
definitely seeing that as very beneficial. Um, and so, you mentioned like there was so much unpredictability, in the market. It sounds like you were able to get ahead of a couple of things, but I'm curious as you all are planning out or we're moving kind of in this next decade of climate and impact investing, how do you see include or VCI really evolving?
Yeah, I mean, it's interesting. I'm doubling down as I typically do. I mean, I think we're gonna go, we're gonna dip and then kind of come back up. Why? Because we have to. I think it's an imperative. And so I don't see it as I mean, it's a tough time now, but we're just going into kind of a little bit of a tailspin. And if we stay kind of firm and centered, we can kind of get into the eye of the storm and then, let it kind of calm down. And so that's kind of how I see a lot of these market fluctuations, and also just kind of the policy piece that, again, being in the U.S. and having that be kind of the biggest market, it does affect the rest of the globe. But I think we're seeing decoupling of the, US kind of hegemonic center. And so it's like we're going to start deploying capital into local communities. I think that's where we're going. I mean, we are going to continue to move at the speed of innovation, climate, impact and finance, and in the places that it matters. I think as much as US is the center, I think we are global citizens, and particularly for climate and other things. I think there's a lot to learn across borders, and and we're starting to build some of those bridges in other global markets. This is not like a today, 2025, or maybe even not 2026, but we've built relationships in key, markets, GCC, Africa, et cetera, where we believe that in the next 2 to 3 years, we can continue to provide bridges both for LP capital, but also for managers to access and invest in these other markets that are actually a little bit ahead of the curve, or going to be ahead of the curve, depending on, where we,
Yeah.
end up, pardon me, in terms of our policy around climate finance. I mean, my work at Series Inc. with the net zero and the asset allocator kind of um sorry guys, kind of drive is really important to me. And so
Mhm.
I've been doubling down there kind of at that like kind of larger allocator level to make sure that we have the freedom to invest in climate focused strategies, and that we're able to really continue to do our climate mitigation work. I mean, I just think it's important. It actually hits every other sector, right, from healthcare to the way that we live and the way that we
Absolutely.
thrive. So,
Absolutely, absolutely. I do want to encourage our guests today as well. If you all have any questions for Bahia while we have this time with her, feel free to drop them either in the chat or into the Q&A. And for those of us who have just joined us, definitely ensure that you are going to impactalpha.com/open to get Impact Alpha Open delivered to your inbox. It's a free weekly newsletter. You're going to get that expert curated investment briefing. And again, we want you to stay ahead of the curve. So make sure if you have not already. And I think Isaac, our incredible producer, is probably going to drop that into the chat one more time for those who may have missed it and joining us a little later.
proud subscriber again,
Yes.
proud from the beginning. So,
Yes, yes. And as we start to come to a close here, Bahia, I'm curious, especially for the investors in the room, what is it that you want them to leave with, especially if they're ready to move really beyond talk and into catalytic action? I'll be honest with you, I was at Climate Week in New York City just 2 weeks ago, which time is flying by so quickly. We're like
yeah,
the year's almost pretty much
it's
done.
true. Yeah.
Um, but I think there was a lot of great conversations, a lot of inspiring talks, right? And it seemed that I think to your point, those that have been investing and adding capital into this space the last few years are continuing to do so.
Yeah.
But at the same time, it also seems as though folks are of this space of how do I do more?
Yeah.
How do we really move the needle? And then, yes, if we're here in the US where things are changing very rapidly, and though we can have this global focus, we still want to see the US progress.
Yeah, absolutely. Yeah, we're the driver of global economic growth. I would say the answer to that is get creative. I mean, I think that's where, the Include platform has been a bit of a leader in the space, like not being, and it's tough. It's tough for kind of larger institutionals to get the buy-in to do this. But even if you have a carve, I mean, where we've been able to be influential is really pushing for carve outs of a certain small percentage, right? So that you're not tying kind of salaried employee kind of outcomes to like doing like a full scale kind of climate strategy. But if you're taking a small the small sleeve or creating a mandate approach to doing some kind of creative or strategic investments, that's another, kind of thinking about the way that we talk about the work and maybe being a little bit and this is, it can be hard, but creative, and that might mean a little softer. Maybe we think about strategic partnerships and maybe we're not calling it climate. Maybe we're talking about a strategic, pool of investment capital, right? But then when we look at what we're actually underwriting for, it's, making sure that there's a climate strategy embedded in those firms and or those companies. That's just kind of one thing that comes to mind in terms of being able to do the work that we know we need to do as global citizens and, um, moms and dads and and children of folks that we want to see thrive
Yeah. And
um
aunties, because
and
the
aunties and
aunties.
aunties and aunties, and really that family, right? I always talk about bringing community and care into capital markets. I mean, this is a human endeavor, right? The investment is not decoupled from human impact, right? That's why I think impact is appropriate. um but I think the creative piece is interesting. We're happy to talk to anyone around working together in partnership around those type of creative vehicles. We've done them from large foundations. We have a lot of the large top 10 and 15 foundations that are supporting our work across the platform or have invested in our fund to funds. We look to partner long term with folks that really want to make the impact and might need a little bit of kind of support and that kind of screening and underwriting power that we can share. So yeah, I mean, I think that's get creative. Let us know if you need any help and let's get to work. I mean, I think
Yes,
we just have to move forward.
absolutely. I think that's a very inspiring and hopeful message that's also very action-packed as well. But here, where can people actually get in touch either with you or the Include team?
Yeah.
Yeah.
So for managers, we've got the website includeventures.com, which I'm happy to put in. I'm not sure if I have access to the main chat, but happy for you to put in the Include Ventures. That's for managers to start to become, part of the pipeline and to learn more about your strategies so we can see if there's a fit.
Yeah. And
We
what's the URL for that?
That's www.includeventures.com. And we can then, push you into VC Include if you're kind of a first time manager. It's about to launch or thinking about launching. We have a pre-accelerator and accelerator. And so we kind of help managers, do that thinking around launching and scaling their firm. And then Include Ventures, obviously invest in market rate, social environmental
Yeah.
impact funds, right? So it's kind of almost think of it as the graduation, like the institutional quality investment vehicle. And then you're welcome to give my, email around partnerships around LPs that are looking to either invest in fund to funds that have this type of strategy or, want to do some creative advisory work to really kind of inform your IC and or board and work with the investment professionals to be an additive to their team.
Amazing. We greatly appreciate it. And just right before we go, we got an amazing question from our fearless leader and editor in chief, David Bank. And he just asked, How are the VC include cohorts of GPs doing in fundraising? Is the chill thawing?
So again, I mean, top line, they've raised $1 billion, but this has been over the last 4.5 years. So think about it front loaded mostly in year 2021 and 22, right? So you kind of see that big, like north of 250 million that the first cohort raised collectively, with some of those 50 and 60, $70 million funds launching within 1 year in 2021. That's, that was
Yeah.
that year where a lot of capital was deployed. And 22 was kind of that next maybe 150, 200, right? And so it's gone down a bit. It is what I would say is there is capital, but you have to have the networks and the relationships to kind of, because it's not as front and center as a splashy marketing mandate. It actually is kind of below the radar. So I still see and have invested in 100, 150, $200 million, growth and early stage, as well as, smaller private equity funds. But they already have a lot of the relationships and they're really kind of they've got this sales cycle, they kind of have it down. And so I think the market is again tough in the US in certain ways, but I think managers are coming into markers smarter, more positioned with
Mm,
relational, partnerships that they've cultivated before they've entered market, which is really what we're advising. I mean, if you're coming in saying, I just want to build a fund. I mean, I would say go into the pre-accelerator so we can kind of map out what that
mhm,
looks like. If you're saying, I've been an allocator or an operator, I've got 3 years of, sustainability for myself and my family. I really want to raise this $100 million fund or $75 million fund.
yeah.
I've got advisory work, et cetera. And I want to kind of build this thing for the next 30 to 40 years to really drive alpha and impact, then let us know. Like we can actually help you scale that type of with that type of thinking. So I think we delineate, those types of managers.
Yeah. No, perfect clarity and a perfect note to end on as well, Bahia. We are so grateful for your time. We've added in includeventures.com as well as ways to connect with Bahia, particularly for partnerships. So again, thank you so much, Bahia, for just lending us your time, your expertise, and of course the impact and the alpha of your work through the years. And thank you to everyone who joined us this afternoon. We do have this session recorded. We will be sending a recap tomorrow. So if you did join us later, you had to jump off a little early, you can still get the fullness of this conversation. And again, Bahia, we are beyond grateful.
Thank you, Sherrell. Thank you, David. Thank you to the whole team. Really appreciate all your support. And, I'm here for you anytime.
Absolutely. Amazing. Everyone have an amazing, amazing rest of the week. Thanks again. Catch you
Bye
next
for now. Take care.
time.
Bye there.